Welcome, ladies and gentlemen, to Stock Talk on June 19th. It's currently 5:09 p.m. Eastern Time. I appreciate all of your comments that you've made in my videos. I read every single word of it, and we're going to be talking about those tickers in a moment. But for now, let's talk about general market movement, as always, tracking SPY, the S&P 500, on the 180-day chart. So here we are, and in previous videos, we've said over and over again that the close at 274.50 to 275.50, which is the support boxed in this area, is very critical. Why? It's because falling under 274.30, around that area below this box in the support line, will be extremely bearish for the market. But if we manage to start reversing in this area, this is the prime area where we can enter into the markets, because we know markets are more bullish and that this is no more than just a regular kind of consolidation, a regular pullback after a massive move to the upside. So what happened today? Well, pre-market we saw us dipping below this 274.30 mark. That's completely okay, because we can dip under. Look how the 200 period moving average, the red line, has acted as support in the past, right? As well as the orange line, the 150 moving average. Here, 200 moving average, once again, acted as a support. Is this a coincidence? I hope not. And what is our position? What is our play into the markets right now? Well, we talked about how the markets are more bullish, and therefore when we fall into this area, we're looking for a reversal and we're looking entry into the markets, right? We're looking for entry in the markets when the SPY is between 274.50 to 275.50. And we closed where? We closed at 275.50. So what am I looking for in future days to come? Okay, I entered into the markets when it was climbing back up. Okay, into what? Well, I entered into the triple Qs. However, we are looking for, in my opinion, we might still have another rejection at the 20 EMA, come back down and retest the 274.38 mark tomorrow. Okay, similar to this trajectory right here, you can see that we fell to the moving averages, found support, and then we fell back again to the support before we initiated the move upwards. Now, we might still come down, retest this. It doesn't have to fall all the way back down to the 200 moving average. It certainly could, but if we just go down to this area, you might find yourself another great entry position into the markets if you didn't catch on the train today in tomorrow's trading session or in future trading sessions. So if you find yourself, if there's a reversal in that area, that's another way. So we might be in for another small scare, but you shouldn't be very scared as the markets are still pulling above around this support area. Okay, so hopefully intraday this was not too surprising. You can see that this is the boxed area, and what did we do? We fell below, but we managed to pull back to the support. Very positive sign, at least for now. Okay, TVIX tracking volatility. So volatility, I did not change this line, right? We're on the 180-day chart. We know that there was a previous support which is acting as a resistance at 46.94. What was the intraday high today? 46.50 pre-market, right? Pretty darn close to the resistance. So you can see that we spiked here, and now even though it went over 10 percentage points at one point during the market trading session, but volatility started dropping just a little bit. We might be in for another volatility, a smaller volatility spike tomorrow, but that's just my opinion. That's just hypothetical situation, that what I'm seeing right now. So hopefully you guys found some good positions to enter into the markets. Tracking crude oil /CL, we're going to talk a little bit about commodities. On the 180-day chart, what did we see? Well, you see that there's a resistance at 66.66 around that area. It didn't really hit it, and on the 180-day chart, we're forming a continuation on the down move. These are bear flag patterns that are emerging every single time. This bounce was bounced to the 20 EMA, right? The light blue line got rejected, coming back down. So we know that there's a support at 63.55. Here's the support, 63.55. Is this a strong support? It's an okay support. Right now, you can see that it's acted as a resistance in the past. But right now, crude oil, in my opinion, is still on the downtrend. So just wait for this one, because as these bear flag patterns continue. Now, a different story emerges with SPSIOP, or oil and gas exploration, which kind of follows GUSH or GUSH. Right, here's GUSH. looking at GUSH, we actually went up 2.7% today. Here we go. This might be a bull flag pattern that's reemerging. You can see this consolidation pattern. So one can almost surmise once again that intraday, and actually when markets open today, look at this wonderful entry point, right? When you're closest to risk, these are great entry points into these positions. On the 180-day chart, we actively see that the $34, $33 and $34 mark has been a support. Look at this, right? The red line, or the 200 moving average, is actively acting as a support now. And look where we can go. Well, we can certainly go to $39 and $40, based off of this support. Where's the best time to enter? Down here. Look how comfortable you were. This is a significant proportion of gains, 6%. So it shouldn't be a too difficult pattern to play as long as you're willing to enter when your risk, when your theoretical risk is highest. But actually, it's actually the safest play when your risk is highest. So it's kind of counterintuitive, but you just got to realize that. All right, tracking natural gas 4/NG, we see another massive move downwards. Now, remember what we talked about yesterday? We said, what are we looking for UGAZ or UGAZ or natural gas? Natural gas has been making higher highs but higher lows, but we had a failed breakout. And I said, do not enter a position in UGAZ that follows natural gas right now because this is a failed breakout. We have to wait and see what happens. So we can see that we failed breakout and now we're back down here. So where could you have entered? This is a good time to enter, in my opinion. You know where your stop loss is, but this is a failed breakout pattern. We're still on the downtrend, so if you wanted to take a position here, you could, but just know that we are on the downtrend still, and this pattern still has to play out. So it might still go a little more to the downside before we recover. But right now, in my opinion, the best play for natural gas is still no play at all, especially given that natural gas reports come out in 2 days. So just keep in mind with that one. And 4/GC, tracking gold futures. Gold futures, not much surprise. It's dropping 0.24%. We said the next support is around 1268, and you can see that we are still dropping to the downside here. No investments into JDST or JNUG, in my opinion, right now, because JDST doesn't offer enough of a potential. It did go up 1.9% today, but I'm waiting for the gold reversal to kind of edge back up before taking a position in JNUG. Certainly not right now as gold futures are dropping. Let's get to Tesla. Okay, one interesting pattern on Tesla. Here we are. We see that Tesla, what happened today was we had a massive rejection at 373. So one could ask, why was this rejection area? So I want to take you back actually to the 3-year chart. So note that, actually you guys can see this probably better on the 1-year chart. Why did we have a rejection in this area? Well, we had a rejection because this has actively acted as a resistance in the past around the 358 area, and now we closed at 352. So I exited my position Tesla actually 2 days ago when it was kind of still climbing, and now I re-entered into Tesla just a little bit just to dip my toes in once again, and we'll see what happens. But on the 3-year chart, doesn't look as good now, but certainly this is a weekly open and close, and you know where to kind of set your stop loss if you're wrong. But if you're right, this is a continuation of a bull flag pattern, especially once markets recover. So this is one just to kind of watch for right now. Addy Boy, when you get to your comments, awesome, Kevin. Blue seems to be at support. Do you suggest it as an entry point? So we're going to take a look at BLUE or blue. So you can see this on the weekly chart. This is a formation of a bull flag pattern. However, this is a pattern that I like. However, this is just now emerging, right? It could do something like this, and it could do this for a while. So this is not something that I actively want to go in right now. You guys can see that on the candles. Actually, you can see that it tried to pull higher this week. Last week tried to pull higher, and this week has a potential to continue to drop. So it depends on what kind of play you're looking at. On the 1-year chart, what do you see? This is actually even more concerning in a one-year chart, how this is a bear flag pattern that is emerging to the downside. So not an entry point right now, in my opinion, especially if you're trying to play a long-term trade on BLUE. Rizwan, ticker UA, please. Okay, sure thing. Here's UA or Under Armour. Yeah, this one has been incredibly bullish, but we talked about what? I think we talked about Under Armour in the past, and such that because it's climbed so much, at some point, it needs to come down and start meeting the 20 EMA on the 3-year chart. And bro, look at that, right? We're so high over. Let's wait until it at least gets closer to the 20 EMA. Where is the 20 EMA? It's around $1 or $2 less than where we are right now. It may take a little more time. Just give it some patience right now, right? Some patience. So it's coming down right now. It could certainly bounce up and do a double peak, but not one that I would actively enter right now as it's coming to the downside. JWM, hey, Wing has a very predictable pattern in the past 6 months. It breaks the 4-hour 150-day SMA. Just something to monitor and alert in the future. So here's WING showing you guys that. Okay, so WING fell 6.3% to the downside, and this should be a little more concerning for you guys. Because look how on the daily candle we had a massive up move, and then wow, we kind of gapped down after that. So just this one is certainly one to be careful at. Note that the blue line, or the 50 SMA, has acted as a support here, 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 and one can almost think that, you know, at some point this support is no longer going to hold, and we might dip a little even further. So be very cautious with this one. Yes, it's predictable, but because of this major move down, and we actually fell below the 50 SMA, was not able to close at the 50 SMA like in the past, that should be signaling a potential downward turn. Tango, hey, could you please find VRX support? I didn't cover profits and losing money on this one. So here is VRX, and went up 2.89% today. Okay, so we can see a gap down on this day. Yeah, this is certainly a pharmaceutical company and moves extremely quickly, and very risky one at that. So again, this one is just really, you know, careful how when we started coming down, we found support at the 20 EMA line, and you can probably find some sort of, I mean, not support, resistance. So you can imagine you should be probably taking profits at around $24 and maybe 50-60 cents. But you know, as you get higher, you're edging more towards risk again, and that's on the bad side, right? You don't want to get more and more riskier, because it could continue to go down at any point. So this is yeah, so hopefully that helps. Giants, Rico, Kevin, great video. I'm still in IQ. Okay, TTYL. Okay, talk to you later. Okay, IS. Hello, Kevin. How are you? I'm doing good. I stopped losing money on Gas L. And what do I think about KOOL? What do you think? Okay, what do I think? So I never try to guess when there's a breakout. I just kind of look at trends and be like, they're, you know. But here we go. Here's KOOL, obviously on a downtrend, right? You guys can see how the volatility spiked. This is also a penny stock, which in my opinion, can be highly manipulated. Look at these volume spikes right here. This is not something I would actively trade, especially when this is on a downtrend on the 180-day chart, on the 1-year chart, certainly on a downtrend, on the 3-year chart. Man, that looks kind of ugly. So yeah, let's not get into this one right now. All right, that's it for today's video. Thank you once again for joining me. Let me know if you have any comments or suggestions or feedback in the comments below. See you guys tomorrow, Wednesday, for another Stock Talk. Remember what we're talking about in terms of the markets, right? In terms of the markets, what I'm looking at, very hypothetical, but you know, I can see a scenario in which we have another scare tomorrow morning, followed by a reversal once again, you know, another scare tomorrow morning back down here, and then followed by a reversal back up. In that case, we would have a double bottom, a higher low, and we expect the markets to start reversing from there. So let's just see if we do make a daily close below this area. This would again be more bearish, certainly more bearish for the market. So see you guys tomorrow. Like if you like this video, and subscribe if you have not to this channel to get up-to-date notifications. Adios, see you tomorrow.